Hello and welcome to Market Watch. Bit of a half and half week because we're starting on the 30th of October and clearly Wednesday, with being the start of November, also brings other parts to it. So let's pretty much have a look at what's going to happen over the next 2 days. Not a huge amount of data coming out from Australia, but there is a lot of inflation data coming out of Europe and also out of the US. The European numbers are really interesting. If you didn't catch what happened last week around Mario Draghi, he clearly put a huge brake on the euro dollar. He put a huge brake on the idea that they're going to move rates anytime soon. And if you're a manufacturer or a manufacturing country in Europe, geez, you're going to be loving life at the moment. And clearly the part to look there, have a look at the DAX, have a look at Germany, another record high. And it is on the idea that he's trying to push the euro lower. It's also on the idea that he needs to support the eurozone for the foreseeable future. So look at that inflation number, because the reason he's saying that it's going to be in the market for much, much longer is that inflation still just isn't materializing in Europe. Shock horror, we saw that last week with us here in Australia. You also see it this week with the US, and the US CPI is likely to show, despite the fact they want to get to 2%, it's still not there. Then I want to look at November and moving into what happens at the end of the week. Non-farm payrolls is always core. You really do need to look at it. And the reason I need to highlight that, last week I talked about what's going on with the Aussie dollar. And at the moment there was a really interesting breakdown with the Aussie pushing through 76 cents, looking like it could be going towards 74. If non-farm payrolls, as expected, continue to show that they're printing at quite a reasonable rate, around about 170,000 jobs added in the US, December's locked in. It's a question of whether or not it also moves next year. Next year, the Fed is forecasting 3 rate rises. The market's only pricing in 1 3/4 of a rate rise. If there is a good print, if it brings up the idea that rates will rise faster than estimated from the market, it will make the US dollar quite attractive, and that pushes the Aussie lower still. And the reason you need to look at that is that therefore means that if you're looking for investment ideas, if you're looking at a way of what might be a 2018 story, if the Aussie's lower, there's 2 sides to it. Those that denote most of their income from US dollars, look at things like commodity plays. Also those that have offshore exposure, you can then start highlighting things like Amcor, Macquarie, the healthcare space. Most of them have a US dollar denoted baseline. All of that's a positive. It also means that our exports are certainly something to look at as well, with regards to, we put a lot of exports out in US denoted numbers as well, and that's a return that we get and a kick that we get as well. So we do need a lower currency, and the non-farm payrolls on Friday are core to that, along with their CPI that comes out on Thursday night our time. It's not a much Australian data that comes the week after, and again, it'll be around the RBA and all that material as well. But our trade balance is out on Thursday, and the trade balance, the part you need to look at is whether or not exports have really slowed down in the last half on the back of the Chinese starting to slow down on their demands for commodities. And that's the only Australian data I'd highlight, but it is about international stuff and the effect that it has on us. It'll be an interesting week. November, 2 months to go towards the end of the year. November's always an interesting one because Melbourne Cup RBA traditionally has been a month they try and sort of allude to or actually do move rates. Don't expect they will, and very clearly say that. But November is always an interesting month for policy because it's always gearing up for the year after.